Good morning, Liz.
Good morning.
So we're so glad you're here. It's going to be very difficult to follow that intro from Commissioner Zimmerman, but
Thank you for that.
yes, absolutely. Thank you for that, Justin.
Well, first of all, I just want to thank you for having me. It's an honor and a privilege to be here today. We've had numerous conversations prior to this meeting today, and I have to tell you, the more I think about it, the more passionate I am about community banking in general. So I'm looking forward to our conversation.
Oh, I am too, and I know everyone here is too. And as you know, we got a little sample of Connect One and you last night through the video. So again, thank you for being part of that, and thank you for sharing that part of your story. And we're going to get into a few more things today, which I'm
And by the way,
to.
Justin, I've lived in New Jersey for 30 years now. Am I forgiven?
So Liz, maybe I'll start with this. You know, we've talked a lot in this conference so far just about community banking, and a couple of themes have emerged, and I'd like to get to those. But maybe just to level set for the audience here, love to hear your views on just kind of a simple question. What is Connect One Bank, and what does Connect One Bank mean to Englewood Cliffs, New Jersey, and all of the communities that you currently serve?
Connect One Bank started as a de novo institution. I mentioned that in my video that you shared with everyone. And we started it really because our current CEO and chairman was dissatisfied with banking. His community bank in the area had been gobbled up, and he just didn't have the resource to go into a banking institution and have a conversation with a decision maker. And that's what we have always strived for. We have 5 core values. The number 1 core value is people first, and that means our clients and our staff. The second value is sense of urgency. What does that mean? That means being proactive and making sure that we get back to the client as soon as possible, making an impact for our clients and our community, connecting our different clients and the community, and then finally forward thinking. What can we do to help move businesses forward? How to help people with maybe technology, new tools that they can use to make the banking experience more user friendly.
So Liz, I find it interesting that you're in North Jersey. You are in the greater New York metropolitan area as a community bank, and I'll note you are currently right under the $10 billion threshold, and I'd love to, we'll explore that a little bit. But how does a community bank compete in that market? You've got every bank from all over the world.
Yes, and trust me, I have been in meetings with potential clients when we are pitching the bank, and we're competing with much larger institutions. And I think what makes us a little bit different, and I think most community banks different, is that you do have a vested interest in what happens to that client and how you can actually help that client. And one of the things that I think all of us as community bankers have is the ability to be more responsive and quicker, right? So I'll give you an example, a term sheet, right? So they call XYZ Bank and it takes a week to get a term sheet. Well, our rule of thumb is if we are interested in a deal, we'll get the term sheet out within 48 hours. Well, you can't do that in a much more larger institution where there's a lot of bureaucracy, right? So there's policies and procedures for a reason. However, when you're a community bank, I think you have the advantage of being nimble and being able to get in front of a client. I'll never forget, we were meeting with a potential client, and he said the reason that he came to us was because I went to the meeting. And he said, well, I'm never gonna meet the president of XYZ Bank, or I'm never going to have the type of relationship with a banker where I can actually reach out to them and they respond within hours. Right? It's a time game, right? So for most business owners, time is money, and they don't necessarily work from 9 to 5. So you need to be responsive when it's convenient for them.
So that's interesting, Liz. Both the fact that at your size and scale that your bank is that responsive, and also just this notion that you're not time boxed between 9 to 5. So that seems like you've had there's a cultural element to this, right? You've had to infuse that across your staff. You're going to be responsive at 9, 10, 11 o'clock at night.
Oh, we've done it.
So how does that, how do you build that culture in your organization, and how do you maintain that relationship approach, especially as you grow?
Well, I think one of the advantages that we have is we were started by an entrepreneur, so we all have a little bit of that entrepreneurial spirit. And I think it's so important to hire good athletes. So I feel like I can teach you banking, but I can't teach you to have good work ethic, or I can't teach you to genuinely care about the client. And that's something that we talk about all the time, and it starts at the top. So if I am responsive to my people when they have a question, and I go out of my way for my people, they will do the same for our clients as well. You know, I had a situation yesterday. Dawn sent me a message. I was in the middle of another conference, and she's like, you know, we need a deal discussion meeting. And I was like, okay, let's just make it happen. Can we do it at 6 o'clock at night? Can we do it tomorrow morning at 7 a.m.? Like, how quickly do we need to get back to the client? And that's, you know, that's what's top of mind all the time, is how do we service our clients the best possible way? Now, things happen, and I always tell people you need to have work-life balance. But when there is an issue or a situation, then you need to be extra responsive, right? Because that's what we're selling. We're selling that responsiveness, we're selling that decision making, and that's really the only differentiation we have. I mean, everybody has the same money, right? You have a $20 bill, I have a $20 bill, it's all the same.
So Liz, you got your start in banking at a larger institution, right? And then at some point, maybe you could share with us just a little bit of how you made that transition. And then I'd love to hear a little bit of the compare and contrast now to the large bank world from your experience, and to where you are today as a community banker since, I think you mentioned 2006. But can you talk a little bit about that transition and what those differences were for you?
Absolutely. I think there is enough business in the United States, which I think is one of the things that makes our country very unique from a banking, you know, regulation institution, the number of banks that we have here, and the different banks that we have. One thing I will say about much larger institutions, and that's where I grew up, right? That was where my training happened. And yes, they have robust training programs, and I think you learn a lot in a much larger institution. But what I found about community banking is it's hands-on experience. You're basically thrown into the fire. I feel like I've gotten my MBA and PhD in banking in the community banking space. And also the other thing is, when you are smaller, people wear multiple hats, and you can get things done by picking up the phone and saying, okay, what's going on with this? Whereas in maybe a larger institution, there are policies and procedures in place, and a lot of layers, and maybe some bureaucracy. And I'm a pretty impatient person, and I want to get back to the client. I want to have an answer for the client. And I think that was part of the frustration. Community banking has allowed me and my team, I think, to feel the impact of your decision making and your actions during the course of a day. When I interview people, especially if they've been at a much larger institution, one of the first things I say is, this is a great place to work if you really want to work. If you're looking to hide, this is a really bad place to come. You know, we tend to, you know, call people out if something isn't done, and not in a bad way, but saying, how can I help you? When I visit the different branches, when I visit different departments, my first question to them is, how can I help you? Or can you please tell me one or two things that are really like challenges for you, right? So it could be something so simple. One time I had a breakfast, so quarterly I have a breakfast with about 20 different people, and we pick and choose from different departments, so we have a different array of people. And you know, what we talk about there stays in that room. And our chief culture and experience officer takes notes, and we address some of those challenges. So one time a branch manager said to me, well, it takes me about an hour to open a business account. I said, how is that possible? Well, I have to print out these papers and we have to sign it. And I said, there has to be a better way of doing that. And so we found that better way of doing that, right? So we want our people to be efficient. We want them to be happy. We want them not to be frustrated. We want them to have a sense of accomplishment and pride in what they do every day.
So it's interesting you mentioned that, right? You've got kind of a manual process, and looking for efficiencies. One of the themes, it hasn't really emerged this year, but in past years of this conference has really been kind of the transformational ability of technology in terms of community banking, right? And then there's that maybe healthy tension, maybe unhealthy tension between being a relationship banker and also leveraging technology. And I know Connect One is a technology forward bank, if that's fair. Can you talk a little bit about how Connect One has thought about maybe onboarding technology, integrating it into its business model while still maintaining, I think, some of these cultural aspects of how you do your business?
I think the human connection will always be important regardless of what business you're in. And when we think of technology, we think of it as a tool and as a resource and options for our clients. So for example, if you want to open an account, if you'd like to go to a branch and sit with a person and open an account, you can do that. If you want to go online and open an account, you can do that as well. So I don't think technology is necessarily a replacement for what we do, especially when it comes to relationship building. People still want to deal with people. It's no different than when you call a large corporation or you have a problem with a product or a service, and it's like, press 1, press 2. The cable company drives me crazy when I have to call them, and it's just like, I just want to talk to a person. And so we offer that option, right? We have a call center, we have the branch network, we have relationship managers. We have all the options available, but we do use technology to make us more efficient. And I especially am concerned about making technology more efficient in the operations area, which I think is so important. People don't want to just look at a screen all day and say, okay, did the escrow payments go out? That should be automated. You should have a report, and instead of taking 3 hours of looking at a screen, it should take 15 minutes looking, at a report. And that's the way we view technology.
So Liz, I'd like to ask you about, I think today the bank is standing at $9.8 billion in assets, and there is you announced an acquisition a couple weeks ago, publicly announced an acquisition that will take you above the $10 billion threshold, right? And so, that kind of the Dodd-Frank definition of a community bank, right? I already saw your reaction there.
Yes, sorry. Yes, I've been told I shouldn't play poker.
is $10 billion now, and this idea of the community bank definition came up twice yesterday. Governor Bowman spoke about it in her remarks, really thinking about, she expressed some concern over these asset size thresholds for defining a community bank. Chairman Gruenberg also noted a study that the FDIC did a few years ago to really explore what a maybe I'll call it a true definition of community bank is. Nonetheless, you are going to cross that $10 billion threshold, and that has some consequences, some regulatory consequences. Can you talk a little bit about that? How has Connect One thought about that? How have you prepared for that transition, and how's that going to change, if at all, how Connect One operates?
Well, it's funny because when we were about $7 billion in assets, we already were talking to our regulators about preparing for the $10 billion mark. And we created some roles within the organization. We hired some very experienced talent to help us get past the $10 billion threshold. And we just always wanted to be proactive when it came to that $10 billion mark. And we've been at 9.7 for a while now. The economy has really contributed to that just because there has not been significant loan growth in our portfolio. And it's not that we were afraid to go over 10 billion. It wasn't something, I know some institutions would stay below the 10 billion just because of the cost. That was never a concern of ours. What we wanted to make sure was that we had the infrastructure in place to make sure that we were prepared for continuous examination and make sure that we were prepared for what's the next thing. And it's funny when you said acquisition, we don't actually use that word. We use the word merger because we don't consider it an acquisition. It's a merger of a community bank in adjacent market. We intend on keeping folks if they want to stay. They have actually 40 branches. We have 23, so they're almost double in size. And we look at it as an enhancement to the community banking space. And although the definition, maybe over 10 billion, is no longer considered a community bank, we at heart will always be a community bank. That's what's important to us. Some smaller acquisitions that we've done in the past is because those banks actually came to us and asked us to partner with them. We weren't necessarily actively seeking them out. And that's why we call it a merger, because it's not, when I think of an acquisition, I think of kind of like a slash and burn, you know. And when we think of a merger, we think of an enhancement and being able to do more for our clients and being able to do more for the community. And that's the way we think about it.
So let me push on that thread a little bit more. So yesterday we had a paper presented by Rohan Williamson. I think I saw him before out of Georgetown, and one of the findings, it was kind of a counterintuitive finding, right? That when there was a merger or an acquisition, that there was actually, in certain circumstances, there was an observable increase in small business lending in those markets, and that generated quite a bit of discussion. Because the top line, you could think of this as saying, you're going to see enhancements if we have fewer community banks. Not the finding, right? But that's, but certainly, you know, you can kind of read the abstract and say, oh, like what is that, right? That's sounds like that's not the case here. But I'd love to hear your thoughts on that, because this is a situation where you are merging with another bank, so that will be one fewer, you know, one less charter. Mm-hmm. But at the same time, this is obviously a good thing for Connect One Bank, and I'm curious how you think about that, and maybe in the context of that paper and what that might mean for the community, because it sounds like, in your experience, it does lead to some enhancements when you have these mergers.
It does, and a lot of these, maybe the smaller community banks, and this is actually going on right now. The bank that we're merging with, First National Bank of Long Island, they've been around for about 100 years. They're $4 billion in size, a very well-respected institution. It's an institution that we've admired for probably about 15 years. We knew the CEO that was in charge prior to the newer CEO. So we've always had a very friendly relationship, and even in the past, we always talked about possibly doing some participations together, because they had limited capabilities or, you know, limited legal lending limit issues. So needless to say, we've gotten such a positive response, because we were opening a few locations out in Long Island anyway. We hired a very seasoned banker from one of the other community banks that had merged with a larger institution. And so we were already in the market, and this has kind of just propelled our expansion into the market. And we've gotten phone calls from existing clients, from prospective clients. It's all been very, very positive. And I think the necessity for having, and they're still considering us a community bank, by the way, you know, the necessity to have a true community bank in that area is something that the small to mid-sized businesses really want to work with. They don't want to work with a much larger institution. And part of the reason is not because they can't service their needs. It has more to do with the personal relationship that they can develop with their banker. And so I can see how an increase would happen. However, not all, and this is the one thing that drives me crazy, not all banks are created equal. Even within the community banking space, we're in the New York City metro area. You know, if I'm talking to a banker from, you know, even the Florida market, a small community bank in Florida, they have a different niche. They have a different client set. So we're not all created equal. Or if you're in a rural area, and there's only one community bank, I mean, that's vital to that community. So, I always think to myself, how can we make community banking in general more fun, more exciting? How do we get the next generation to be excited about this? I could remember my children when they were probably like 10 or 11 years old, and I was constantly, on my phone or on a call or something. They're like, "You have such a boring job, Mom." And now they're in their 20s and they're like, "Wow, Mom, you guys do a lot," because, they follow our LinkedIn page and, they're seeing the news. And of course, they're clients because I won't let them bank anywhere else. Actually, my daughter called me. She's like, "My debit card isn't working. What should I do?" But these are the types of things that we need to do for the next generation to understand the importance of community banking. And what really gives me so much pride is we have this amazing internship program every year, and most of these kids have no idea what banking is about. And then they come in and they're like, "Oh my God, this is so amazing." And we do a community service project and we have rotations through the different departments. And I said, there's so much that people don't know about banking. And these kids do not understand the difference between a large bank, a regional, a community, an internet bank, Chime. I don't even know what they're doing these days, but they don't know what FDIC insurance is, which I'm flabbergasted about. I'm like, I think we need to start doing some courses here, in high school and middle school to teach them about what are they teaching?
No, it's interesting you say that, we had, CSBS obviously has the case study competition that they sponsor.
Which I think is great.
Well, and maybe we can recruit Connect One in the future as a studied bank, if they'll have you above 10 billion.
Yes, please.
But that came up as well. Just this idea of how do you attract kind of that undergraduate level to community bankings, and one of the students said, you kind of need to target my parents, not me. So,
really?
Yeah,
oh, interesting.
But it does come down. It does. One of the takeaways from other aspects of this conference, and we've said it over and over again: relationships, and we discussed just putting the value on relationships. So I'd like to hear your thoughts on that a little bit too. How do you value those relationships? How do you put a value on relationships? And it seems like it's client relationships, but it's also like employee relationships too, and your team.
Absolutely. It's funny because sometimes we'll have usually people lead with a loan, right? So somebody will come to us and be like, I need a loan for my business. And I'll be like, okay. I was like, where do you bank? And they'll mention the bank. I said, okay, well, we'll require a banking relationship. And they said, well, how much money do I need to deposit? I said, oh, no. That's not the way it works. I said, actually, what I would like, and it really doesn't matter about the amount, right? Because some people be like, well, I'll put $100,000 in the bank. That should be sufficient. And I said, no, you're missing the point. To me, a relationship is when you go to the next party, or you go to a dinner party, or you're out with your friends and someone says to you, I'm looking for a new bank. Who should I call? I want you to say Connect One Bank. That's the value of a relationship. So I always say it's important to have a really good attorney. It's really important to have a good accountant. It's really important to have a good banker as well. Because when times are good, it's easy, right? Everyone gives you the any rate you want or whatever it is that you want. But when you have an issue and you have some difficulty, that's when a relationship matters, because you can pick up the phone and you can talk to someone and they can actually help you.
So Liz, and I see we're getting we're starting to get
I'm
the
getting
clock
the hook
here. So
yeah.
No, you're not getting the hook. I think I am. One of the things I'd like to as we kind of wrap up this conversation, maybe I've got two final questions. The first one is there is an aspirational aspect to community banking, I think, to this conference as well. I'd be interested in your thoughts on where do you see kind of those next opportunities for community banking, because it's very dynamic. Things seem to change constantly, right? So where do you see that? Maybe not just for Connect One, but you're very engaged in the industry overall. So I know you talk to a lot of folks. Where do you see kind of those next big opportunities to really, I guess, maintain the strength of the business model and make sure that community banking remains relevant?
Yeah, I think it's really important to have a really good relationship with your regulators and really share ideas, right? So like this community banking thing that you're saying, over 10 billion, I don't necessarily agree with. That's my personal opinion, not the opinion of Connect One Bank. But I think that's really important, is to have those open conversations, because as time goes on, the numbers go up, right? So, at one point we had FDIC insurance that was only 100,000, right? And then it bumped up to 250. So we have to be realistic about the future. I think it's so important to really define what community banking is, because I don't think the general public understands what it is. They just say banking, they paint, this a brush stroke, they give you this whatever, and all banks are the same. They're not the same. And I think it's incumbent upon us as bankers, as regulators, as research analysts, to really reach out to the next generation and to really make them understand. And when I say next generation, I'm not just talking about college graduates. I'm talking about people in their 30s and 40s that really don't understand the banking system, what it means, and how important it is to support community banks throughout the country. We still have an amazing banking system here. If you talk to people from other countries, that's not necessarily the case. And so we need to embrace that, and we need to come together, we need to unite, and we need to make sure that our messaging is consistent.
That's great. Maybe final question here. This is an audience of researchers, we got regulators, we have community bankers as well. So I'm and we have folks participating live stream. So for those three audiences, I'm curious, what would you ask of them as we move forward in kind of our different roles, when we think about kind of the future viability of community banks?
You had to ask me such a hard question at the end. I think, again, the unity and the messaging, we need to really we're all playing for the same team. We're all playing for the same team. So just remember that. It's so important in order for our economy to continue to thrive. What makes this country great is the ability to have small to mid-sized businesses contribute to the GDP. I mean, when you think about it, they are the ones that are keeping the engine going of this country, and it's so important to make sure that we understand that and that we support that as we move forward.
Oh, that's great. Well, Liz, thank you so much. It's been a pleasure getting to know you over the past couple of months.
Jim.
Really appreciate having the opportunity to speak with you here today. Thank you so much for being part of our conference tradition, and hopefully we'll see lots more of you. Would love to have you back.
Thank you so much for having me.
All right, thank you.